Right, we did get those positive leads out of the US overnight, and that's helping Asian stocks slightly above water, but no big movers today. There's a sign perhaps of low volume and liquidity in the markets right now. Energy stocks and mining stocks, though, are the top losers, and that's weighing down on the Australian index, and the likes of BHP Billiton, Fortescue Metals, not doing too well. Of course, the recent bounce in commodities wasn't expected to last too long. There wasn't a lot of fundamentals backing that recent climb. But it's interesting to see, though, that oil prices are drifting higher in Asian trading day after last night's losses. And that's perhaps a sign that traders are going into this oil trade on expectations that tomorrow's US oil inventory numbers are likely to show a drop. So if that happens, that could be a boost or be positive for oil prices. And we also expect to see some data out of the US today in the likes of GDP, housing and personal income. So if that's positive as well, that will be a boost for the demand outlook. We did get some macro data from New Zealand today. Trade balance numbers came in largely flat. Going into the numbers, the Kiwi dollar was weakening. So it looks like the news wasn't as bad as expected. So some traders thinking it might be oversold, and we're starting to see the Kiwi dollar recouping some of those losses today. Overall, Kiwi dollar looks like it's starting to consolidate, but the long-term bias is on the downside, with the New Zealand Central Bank calling for the levels of the Kiwi dollar still too high and unjustifiable. In Hong Kong, we did see a Chinese IPO making its debut. The Dalian Wanda Commercial Property Group had its IPO. That's the second largest commercial property owner in the world, and the Asia Pacific's largest IPO after Australia's Medibank this year. So on this first trading day, it didn't do too well. Initial price was at $48. It rose slightly at 0.4% in the beginning of the day, but it's since dropped by over 4%. So that shows the weak sentiment on the China property market and shows that the fundamentals are still not quite there yet for the wider sector to turn around. So that's likely to weigh on industrial commodities like copper, iron and steel. So that's likely to be the picture until we see the Chinese property market turn around.